Good morning, good afternoon, and good evening, everyone, wherever you may be, and welcome to the Did You Know Crypto podcast. Today, we're going to be doing a general overview of what we know about the new Libra currency that Facebook is launching. This is going to be a solo episode with just myself, so I apologize in advance that you just have to listen to me today. So this is something that I called a while ago. Once Facebook started to ban crypto advertisements and really started to put the hammer down on anything crypto related, to me it was quite clear that this was because they were going to develop their own cryptocurrency of sorts for their platforms. What I originally thought it was going to be proprietary, so I did get that part wrong, but we'll talk about that a little bit more. So, Mark Zuckerberg is a lot of things, and there's a lot about, what he and his company do that I don't like, and frankly, I think is pretty abhorrent in terms of promoting an open society, a free society, a more libertarian society. But he is a genius businessman with a keen ability to predict trends and see where attention is going. That's key. Where is attention going? Where is the next trend? So people criticize, Facebook, the Facebook platform, that solo platform. They call it an aging platform. It's slowly bleeding users, which it is. But Mark Zuckerberg and Facebook, the company, not the platform, but the company, has always been very forward thinking. They were able to, he himself saw, in the Facebooks, because it used to be called the Facebook. Actually, originally it was Crimson Connect when he was doing it with the Winklevoss twins and all that. But when the Facebook kind of became it was coming into his brain on what did this mean, he really instantly, or I should say pretty quickly, realized the potential, from day one. And then later, as Facebook was growing, he realized that Instagram was going to be the next thing. Like, Instagram already existed. It was already had users, but it was nothing of what it was now. And he realized where attention was moving, that Instagram was going to be the next big thing. So he bought it for $1 billion at the time. I don't have the date in front of me. But at the time, it was a move that was criticized for being ridiculously overpriced. Well, Instagram now, as of last year, I believe, generates, I believe it was 2018, they generate $9 billion in ad revenue alone. Just Instagram, not all of Facebook's platforms, but Instagram alone annually gives them $9 billion in ad revenue. And it has been valued at $100 billion if it was its own company and not just a division of Facebook. So Zuckerberg saw the potential in Snapchat as well. Snapchat is, as far as apps go, I haven't looked at the numbers in probably a little over a year, but it was where basically all the youth attention was going, was people, the younger kids, in the 18 and under were using Snapchat over, say, Facebook. Facebook's an older people platform now. But the owner would not sell. He was already independently wealthy, and he wasn't awed by a big check. They basically then just added Snapchat-like features to Facebook and Instagram, and it severely damaged Snapchat to the point where it really hasn't recovered its lost market share, and definitely not it's failed to meet a lot of its targets, and it's definitely lost a lot of market share to Instagram since that time. But I have no doubt that Bitcoin pretty early on, not like 2012, right? But 2013, 2014, when it really kind of came into the purview of the Forbes and Wall Street Journal crowd, that idea of a workable digital currency could not have been something that wasn't floating around Mark Zuckerberg's brain, basically, for this past half decade. So as the trend of Bitcoin success has continued to rise, and I think that now we are seeing the culmination of that, the culmination of him understanding the trends, of understanding what's coming next. And we see that now. Ta-da! Libra! Libra. Libra since Tuesday, which would have been, I believe, let me check. You'll hear a little click. Let's look here. 18 June 2019. The date of recording is 20 June 2019. And ever since the 18th, the last couple of days, it's just been Libra. At least in the Bitcoin world. You can't, definitely on a Tuesday, you couldn't really scroll more than about 3 tweets in Bitcoin Twitter without running into a mention of Libra. And rightfully so. It is a massive thing, right? And we'll kind of explain a little bit more why, but just, at a very basic level in terms of the Bitcoin space, it legitimizes the term cryptocurrency. And some people have argued it's not really a cryptocurrency, it's not really a blockchain. There's some merit maybe to that argument a little bit. And I'm not a person who codes and understands the stuff at a very deep technical level. So maybe that may be true in certain aspects. But they're calling themselves a cryptocurrency. It's perceived to be a cryptocurrency. The world now sees that a company like Facebook that owns Instagram, WhatsApp, is worth, and that is worth hundreds and hundreds of billions of dollars. And companies like Uber, companies like eBay, all these larger companies that are jumping on to participate in this are now signaling to the public cryptocurrency is legitimate. So, what does that really mean? Well, let's kind of talk about Libra and what it is, right? Just kind of a general. This is not going to be a technical deep dive. I will include links to basically their generic, kind of more public-friendly, white paper-ish kind of overview of it, as well as the actual technical white paper. And like I just said, I am not a technical person. I'm not a coder, so I couldn't explain a lot of this. But what I'm going to do is kind of go over a very topical overview of the 3 parts of Libra. So what is it? It is a blockchain, it is a currency, and it is an association who governs it. So Libra the blockchain, the protocol, Libra the currency, and Libra the association. So we'll start with the blockchain. So the Libra blockchain doesn't really operate in the same way that the Bitcoin blockchain does, right? Jameson Lopp, who is a Bitcoin programmer, he works for Casa Hodl, and he had a Medium post, which I will link to as well. He described it as the blocks being more of a logical construct than an actual block of transactions the way that Bitcoin does, so that the validators can coordinate the snapshots of the ledger state. So basically, the whole of Libra is not like a chain of blocks, right? If you imagine a blockchain, just imagine blocks attached by strings, right? And you can imagine that each block of transactions relates to the previous one prior. That's Bitcoin. The way that this works is that each transaction basically creates a new snapshot state of the network. So the state of the network is basically the history of all the transactions and everything that's ever happened on that network from that moment that the snapshot's taken to the very first one. So the blocks, the snapshot of the network is the block basically in their blockchain. So every snapshot in the entire history is just one big block. And the next time that there's another transaction, it creates another snapshot. That's another, block of a screenshot, a snapshot of that whole network. So think of it like a screen on your phone or your desktop. And let's just say every time you moved an icon, you got rid of Facebook, or you moved Facebook to the second screen and you moved Instagram over because you use that more often. Every time you did anything like that, you rearranged it, anything, it would screenshot your home screen and all the icons on it. And then next time that you did it again, it would screenshot it again. That screenshot of your home screen is the blocks for that Libra blockchain of what's happened on your phone, right? You open up Word, screenshots that. You type 15 sentences, screenshots that. That is the blocks, right? It's recording everything that's happened on the screen of your phone every single time. So in Bitcoin, let's kind of go back to Bitcoin a little bit to kind of really let you know, if you aren't familiar, and some of you may not really be that familiar with how Bitcoin works. I'm not going to really go into that. I have done some earlier episodes on how Bitcoin works, and I'll probably redo those a little bit more, as I have learned a lot over the last year and a half. But in short, in Bitcoin, if you remember, if you send 1 Bitcoin to me, and it gets sent, that transaction of you sending me that 1 Bitcoin, it's sent into a pool of transactions. We call it the mempool. And once that's validated and included in the next block by a miner, that transaction, the fact that I now have +1 Bitcoin and you have -1 Bitcoin, is now written into that next block and connected to the previous block of transactions that was validated. So, and it is connected, that string that connects them, it's a unique string of numbers called a hash. And the hash from this new block to the one previous validates the entire chain. Or I should say the hash from the old block to the new block validates the entire chain from that most recent block that just included our transaction to the very, very, very first one. Because the hash is unique between every single block and influences the hash going forward. So if I tried to go back 50 blocks, right, which would go back, that'd be like 4 or 5 hours, and then just run off the top of my head. I'm not good with numbers. So if I try to include a fake block, let's just say, the 50 blocks ago, or 100 blocks ago, whatever it is, to show that, I insert a fake transaction to show that I received 1,000 Bitcoin from you. That would actually change all the hashes on the blocks following. So what that would do is it would indicate that something was wrong, right? So this way, each individual on the Bitcoin network can validate the chain as being valid, right? Because if it had changed those hashes going forward, then only my copy of this bad blockchain would be ringing true, right? Everyone else's would say, hey, this is completely wrong, and it would reject any of these transactions that I was trying to send out to the network. And since there's no central authority to validate these previous blocks, and the, kind of similar to that, the states of the network as valid, each individual node does this independently and then validates it for the whole network. When combined, when these individual nodes, like I'm running or like you would be running, when it combines with the majority of people participating, it indicates that once a majority of people say, actually all what I'm trying to pass off as valid is not, that's what tells everybody that it is invalid. With Libra, it's more like each transaction, it's more like the transactions rewrite the entire ledger history as they're occurring, checking transactions against confirmed snapshots of the entire network. And since the chain is not permissionless, the trade-off for privacy and security, when you have a permissionless blockchain like Bitcoin, you get privacy, you get a higher degree of security. But since it's not that way, it's actually a lot more quote-unquote efficient in terms of validating transactions on the network. Everything that you ever will do in Bitcoin and any of these, when you're comparing one network to the other, it's a matter of trade-offs. It's not that one is perfect and the other one's not perfect. It's that there are trade-offs, and you have to determine what trade-offs are better for you. So, for example, right, if you want to eat, a pizza with a Coke, and you want to do that every single night, right? Your trade-off for momentary, mouth pleasure of enjoying that pizza, that soda, is that that trade-off is that you're trading that off for, say, increased gained weight, all the kind of stuff that goes along with that, more fatigue, you don't sleep as well, higher rates of disease and cancer or whatever over the long haul. So those are your trade-offs. On the other hand, if you eat healthy, your trade-off is you have a higher chance of living longer, of having a better mental health outlook and all this kind of stuff. But the trade-off is you don't get to enjoy that delicious pizza. So Another point another facet of the Libra blockchain is it does employ what's called Byzantine fault tolerance in its consensus model, which allows for up to a third of the nodes in the network to either be faulty or to act in a dishonest fashion. So if you don't know what Byzantine fault tolerance is, I will have a couple links to basically the Wikipedia, as well as kind of a simpler, more explanation of it as well. And I'll also be covering this in my upcoming minicast episode 2. I was hoping to have it done and released this Friday, but just things got too busy. I was not able to do it. But that's going to be coming out the following Friday after this episode airs on Monday. In general, though, this is a problem in distributed networks where, what happens if some of the actors fail or try to pass off bad information? By actors, I mean nodes or participants in the network. If they fail, they don't work, or if they try to pass bad information in the network, or if they're just being malicious. Things like double spending a coin or attacking the network. In a centralized network, a authority can step in to right the wrong, right? They can, in a centralized computing network, they can just basically say, nope, that doesn't work, right? So the trade-off there with centralized versus decentralized is that centralized, you can have higher efficiency for kind of correcting these issues, right? But you also then are at the behest of and at the hoping that centralized authority does not act maliciously themselves, right? Because there's no consensus other than what they do. And also that there's a single point of failure. If that authority is somehow compromised, it's no good for anybody. But in a distributed system, conversely, where there's no central authority to step in, and there's no quote unquote leader, how do you do this? How is this actually done in a decentralized? Well, in Bitcoin, you use proof of work, and this means that someone that wished to act maliciously on the chain, they would need to, invest significant amount of time, money, and effort in an attempt to do this, right? And the larger the proof of network is, the larger it is, the more expensive and less likely this becomes that someone is going to not attempt, because people attempt to, right? Bitcoin is the biggest honeypot really in history for hackers to prove that Bitcoin doesn't work. But the larger that the network becomes, and Bitcoin is doing this every single day, the less likely it becomes. It's never going to be impossible, right? Because the ability for it to happen is present in the network, right? If you have a consensus mechanism, that means there's an possibility for someone to get it. But the probability goes down. It's like the fact that it hasn't occurred yet, where there's hundreds of billions of dollars at stake, means that the chances of it are extremely low, and they get lower every single day. With Libra, basically, they don't even have 100 nodes yet. But let's say that they did. The way it works with them is if 30 of the nodes in the network just went down all of a sudden, or they decided to attack the network, the majority of the honest nodes in the network would be signaling the correct state of the network, i.e. the history of all the transactions and the ability to trust what it's telling you when someone sends you 10 Libra and you receive it, that you can know that that's valid, right? Because the majority of the nodes are acting honestly and giving you a correct, valid history of the network, and allows it to continue to function properly, right? But if it goes over 30, a third, then you can have issues, right? And it fails. But the point of in Bitcoin, you want to have the most distributed network you can. The more participants, the less likely it is that anyone can marshal the hash rate or the consensus to be able to do this. With Libra, this could be, to me, it seems less secure. You have fewer participants. Granted, what are the chances that Uber and eBay and all them are going to decide to want to attack the network that they've invested money into and benefit from? But that doesn't mean that's impossible. And the fewer participants means that even though it's a lesser possibility, it's easier to do. Or there's the same low probability, but it's easier to do. if that probability ever became a possibility. So Libra's protocols will also include a few other of these key features. It's going to be open source. I mentioned this already. And this is great. It signals that tech is continuing to move forward and move towards open source versus proprietary code. Microsoft was a really big player that did this for a long time. They were very proprietary, and they've really moved towards open source. So I think that this signals as we go forward, and I think they kind of had to for a couple other reasons. But regardless, it's open source, and this means that anybody can look at the code. They can suggest improvements or build upon it. You can actually, in GitHub the way GitHub works, it's basically the kind of a central repository of the code for a project like Bitcoin or like Libra. And you can suggest improvements, right? So if you see something that's wrong, you can basically suggest a change. And if that's accepted by the people that run that project, right, it'll get merged into the actual, in Bitcoin's case, into the Bitcoin blockchain. And it will also, with Libra, do the same thing, right? So anybody can suggest. And there's actually some Bitcoin people that are actually doing it's kind of funny. They did a commit asking Libra to change a few of the things that basically so that it would look exactly like Bitcoin because it's insecure. But it was kind of a funny little side note of a little bit of a troll going on, as we like to do. So all in all, open source is great. It allows people to build other types of, Libra wallets, build API on top of it. They'll be able to use that code to build smart contracts of their own. And this, I think, is basically kind of why it's going to be the Ethereum killer, right? Because why are you going to build on Ethereum or Tron or EOS or Neo when you can build all of your stuff right on top of something that's already got major backing, that's already set for mass adoption, right? But, we don't really have to necessarily get into any kind of debate about Ethereum or any of that kind of stuff. But as I just mentioned, it's also a smart contract platform. You're going to be able to build all your kind of applications and all that. But the difference is that it uses a brand new programming language called Move. Ethereum uses Solidity. There's all different kinds of programming languages and all that, but they've actually created their own unique one. Another neat aspect that I was a bit surprised at is that Libra's protocol is going to be pseudonymous. And it's going to be very similar to Bitcoin in that way, in that if a wallet sends to Libra to another wallet, it's not going to say Dustin or Jim's. That's the identifying feature on the protocol or each account. And it's not going to be linked to, they stated specifically that each account or each wallet is not going to be linked to a real world identity. So there's going to be KYC, know your customer, which requires identification to your government, like your government ID and known information that's included in government identification. But that's a different thing. We'll talk about that. But the protocol itself will not be linking. Like if you go and look on the Libra blockchain or whatever you want to call it, right, the state of the network, and you see wallet XYZ1234, it's not going to say Dustin's, right? And it's not going to say Jim's or whoever's. That being said, also like Bitcoin, it's important to remember that you can easily link accounts to real-world identities very fast. For example, let's just say, eBay, obviously being involved in this is probably going to, PayPal as well, they are going to include Libra on their platforms as soon as it's ready to go live next. They said spring of 2020, so I'm guessing probably somewhere in the next 8 to 12 months. But if I go into eBay and I buy an antique radio, after I logged in with my eBay, account that has my name, all this kind of stuff, and I pay using my so-called pseudonymous Libra wallet, guess what? That wallet is easily identifiable through chain analysis. And these chain analysis is basically the ability to, at its most basic, connect dots, right, on the chain, and easily identify that with chain analysis that this is mine, and it will forever be associated with me, right? Same thing goes for Bitcoin. If I went to Overstock and I have my Bitcoin wallet and I bought, right when Overstock back in 2014, I think it was, I believe it was, if I remember correctly, it was like, 2014, when they first started accepting Bitcoin. It might have even been earlier than that, but anyways, I digress. If I bought a sofa with Bitcoin back in 2014, and I've never done anything with it then, it will be quite easy for, let's just say I'm being investigated by some government agency or whatever, for them to link by getting records from Overstock now to link that that address, because Overstock's addresses that they use will probably be quite well known and have already been identified on the blockchain. So if they see X wallet sent money to Overstock, they can figure out that it's my name now, it's associated with me. So with Libra, let's just say I bought that radio today on eBay, but 5 years from now I went and bought some illegal fireworks from someone out the back of a gas station, and he gets busted, and then they analyze his Libra wallet. They'd quickly be able to tell that I paid him 125 Libra a couple days before that. So it's forever linked, right? So can you keep a Bitcoin wallet, quote unquote, anonymous? Yes-ish, but you have to be very, very, very careful in the way that you do that. As far as for IP addresses and everything used. If you want to learn how to do that, you can Google it and kind of go down that rabbit hole. I'm not going to give out that kind of information right now just because I don't have it at my disposal, not because I'm against that. But it'll be really interesting to see what privacy tools are developed, and also if Libra attempts to, block mixing or other coin mixing or other anonymizers, like in Bitcoin. You can use something that's called CoinJoin, or I forget the one that Samurai Wallet uses. But anyways, that's kind of more like their term for it. What it does is, like, let's just say you each have one Bitcoin. You get 100 people together, and it mixes all these Bitcoins up multiple times, or as many times, I guess, as you want to set the anonymity level to. And once it does that, it mixes them so much, all these UTXOs, the unspent transaction outputs, right, that are basically actually really your right to that specific asset is that UTXO, your ability to use your private key to spend that UTXO, that unspent transaction output. It mixes all these together and then shoots them back out to each individual person. And now you have brand new Bitcoin that has nothing to do with the ones that you put into there, right? And so this doesn't make it like quote unquote anonymous, but especially if enough people are using these coin mixers and anonymizers, it really makes it almost impossible to do any sort of chain analysis. But anyways, let's keep on moving on. I kind of mentioned it already, but Libra will also be a permissioned protocol. And this is the big difference between Bitcoin and Libra. So if I want to run a full node on Bitcoin and join the network, I can. If I want to mine, and every miner is themselves actually a node, right? Because they have to know the blockchain to be able to mine. I can do that. I can join it at a participant, whether I want to run my own full node for my own reasons or run a mining node, whatever. I can do that. No problem. I don't have to ask anybody. There's no prerequisites other than you have the equipment to do it. You have an internet connection that allows it, and you basically run the program correctly, and that's it, right? As long as you play by the network rules, you can participate. No problem. Libra, however, only allows, well, currently, I don't remember I didn't count them. I should have now, but I know they don't have 100 partners. They're aiming to get 100 partners to run a node, which they required, I believe, 1 billion in assets or revenue and like 500 million in transactions or whatever. And you had to buy, You had to spend $10 million to get the node as well, on top of all those prereqs. And you were basically buying $10 million in Libra. What's it? I forget the exact term. It's like Libra investment token or something along those lines. So there's actually 2 tokens that we're talking about. And we'll get into the Libra, what is the currency itself work. But what most people are thinking of as Libra, the currency, is what you're going to spend, what you're going to have in your wallet on Facebook, what you're going to send to people, kind of like the way Venmo does. But there's actually 2. There's the one everybody gets to use. And then there's basically these investment tokens that act as equity, which basically makes them security. But we'll talk about that in a little bit later too as well. And you buy 10 million of these, $10 million worth of these investment tokens, and then is the only way that you can run it. They claim in the future that they will transition to a permissionless protocol, which infers that if the word means what it's supposed to mean, it infers that anyone could run a node. But I highly, let me say further, highly doubt that this will ever happen. I guess what I mean is that I think that maybe we could be operating with different definitions, that what is truly permissionless and what the word actually means is what Bitcoin is. And that is not what I think Libra will ever be. And I highly doubt that these founding partners will have forked out $10 million to run a node that apparently you or I get to run in like 5 years. That makes no sense to me. And I don't think that they are going to, because it infers that if they're going to expand the ability to run a node, that with the node, you would also be due some of the investment tokens. But I don't know, maybe if you have to purchase that. That gets a little bit more gray area on how I'd want to do that. But in short, I don't think they're going to open it up to anybody. They may expand it beyond 100. That is a real possibility as there's more and more interest in this thing. And they may expand it to more partners that may have they may not get the same 1-to-1 token for their node that the founding partners got. There may be a diluted version of that investment token, but they may do that. But it will only be to the right kind of people. And we are not those right kind of people. So let's move on to how does the actual Libra currency work. Libra aims to be basically a stable coin. If you're not aware what a stable coin is, it's kind of this phenomena in the cryptocurrency world that aims to basically be a stable store of value. As you know, Bitcoin fluctuates. It's got volatility. Every single, Litecoin, Ethereum, Dogecoin, everything. It fluctuates based on supply and demand. And I apologize, I actually got a cold, so my voice is starting to go out here a little bit, but I'll just keep on soldiering on. And things like USDT or US dollar tether or Gemini dollar or USDC, all these different kinds of stable coins, what they really aim to be is to be 1-to-1 with a US dollar. And there's also Euro ones and also that kind of stuff. But the reason that they're aiming to do this is so that it's a lot easier for you to, let's just say, you sell your Bitcoin on Kraken. And instead of getting US dollars that you then, let's just say, for whatever reason, you don't want to chance sending Bitcoin over the network from one exchange to another because of for whatever reason. So you want to send, a dollar value, but you don't want to pull your money out, do a wire transfer, then do a second wire transfer. Once that clears in your bank account to another, you can just send USDT or USDC into that next exchange or whatever. And it's going to be roughly, if you sell one Bitcoin for $10,000 and you get 10,000 USDT, you can send that USDT over and you get basically roughly, small fee taken out, 9,998.5 USDT on the other end or whatever, right? So that you can do that. It's also been, said to be something they could use in the third world or whatever. But anyways, it aims to be a stablecoin. I think this really kills the use case for stablecoins as well, but I could be wrong. But it is, it's not aiming to be a deflationary asset like Bitcoin that accrues higher and higher values over time as the scarcity. There's only 21 million Bitcoin that'll ever be available, and there's far fewer than that that'll be available that have been lost. It'll drive higher prices as the supply dwindles. Every so often, the block reward, every single block, there's a certain amount of Bitcoin produced to increase the supply. That is cut in half every couple of years. We're coming up on one very soon. And as there's more demand, all those things together mean higher and higher prices. So Libra will not be stable in a way that we call the dollar stable, although I wouldn't exactly call the dollar perfectly stable either, but that's a different discussion. So the Libra is going to be backing their coin by what they call a quote-unquote basket of currencies, and this is going to help reduce volatility in price. Bitcoin goes up and down, and that there's a lot of different reasons there actually. Overall, if you dollar cost average Bitcoin every single month, no matter when you started buying Bitcoin, you'd actually be in the green, even if you started at the very peak. Okay, so that's not investment advice. Do whatever you want, do your own research and all that kind of good stuff. But these assets in Libra will be currencies like the dollar, like the euro, like the yuan, and it's even been intimated that government and corporate bonds could be included. And they'll also, reserve the right to rebalance this reserve portfolio if any of the currencies or assets expect or show higher volatility. In this way, the Libra will not be a flat line. It's not going to be 100% stable at all times. There may be points where, you buy $100 in Libra, and in a month, your Libra portfolio could be worth $102. It could be worth $98. But it's going to roughly hover, at least that's what they're trying to do, around the same value that you paid for it. Libra has not indicated that they're going to hold gold or Bitcoin in this basket, but I do suspect that over time, as Bitcoin's value continues to accrue, while Libra's stays quote-unquote stable, a capital flight will occur, at a trickle and increase as people continue to look at charts and see basically this macro line of Libra to Bitcoin showing Bitcoin is a better asset. It's continuing to grow on this steady line upwards in value. And as the Bitcoin network gets larger and larger, it becomes more and more secure. And if you have the option of holding your assets in a extremely secure network that accrues higher values over time, or a network that is highly secure but also stays the same, which one are you going to pick? I think they're going to be increasingly forced to hold more and more Bitcoin in their basket of these currencies and assets to stay competitive. But we'll talk about that a little bit later. Hey folks, I hope that you're enjoying this episode as much as we did recording it. I don't have any sponsors, but if you could do me a big favor and go to iTunes and leave a 5-star or a written review, that would help me out a lot. You can also help out by going to supportmypodcast.com. That's supportmypodcast.com, where you're going to find all the other ways that you can help out. If you actually go to the discounts tab, that's supportmypodcast.com/discounts, you can get on an early mailing list, and you will get access absolutely for free as a listener and supporter of this podcast to discounts for such things as VPNs, Bitcoin wallets, Bitcoin-related clothing, as well as other kind of health products that I think are very helpful for people to just live a better life. So go over to supportmypodcast.com/discounts and sign up today. Another interesting point is that Libra's basket of assets will be held in reserve, and those assets are going to be making money, right? So they are going to be holding, real dollars, real bonds, real euros, and those are going to accrue them interest for holding them, right? So who gets this? Well, according to Facebook, the interest on those assets are to be used to, quote unquote, cover system cost, ensure low transaction fees, and pay dividends to investors who provided capital to create Libra. This is where that Libra investment token comes into play. So when you bought the $10 million, you paid $10 million to run a node, you were buying $10 million in their token. This token basically gives you shares in the equity of the money that's coming off of the Libra reserves. So this indicates that for right now, their plan is that none of the users, any of us that use it, will not be getting any interest holding it. I think this will change, and Caitlin Long on the What Bitcoin Did podcast mentioned that Libra is in a bit of a pickle here, and that there will probably be a populist, outcry, particularly from the left, if this new currency is just going to benefit wealthy Silicon Valley elites who helped create it and who helped give Facebook $10 million each to be able to get these tokens. But the problem is if they offer interest to users, they will actually probably trigger, I shouldn't say probably, they will trigger what's called the Howey test, which is used to determine if something is a security or not. So the Howey test refers to a 1946 Supreme Court case involving the Howey Company of Florida. Yes, the Florida man is ever present even in corporations. And this court case determined that a security is determined if someone was investing money in something and they were led to believe that they will expect to make money to get profits from the efforts of a promoter or a third party, so i.e. not themselves. So Facebook stock is a security because I do expect a profit that is based on the work of a third party, Facebook, right? I wouldn't buy it if I didn't expect profit. And the SEC has determined that Bitcoin and Ethereum as well is not a security because there's no real third party. There's no Bitcoin Incorporated that everybody's working under, or a Bitcoin CEO who's doing the work of the network with an expectation of profit. Bitcoin, yes, does accumulate value, but its decentralization means there's no third party or promoter that a traditional security like Facebook stock would have. Being a security, though, would make use of the Libra and tax implications for users very, very cumbersome, as well invite even more layers of regulations and oversight, which they really don't want. They're going to have enough anyways. If I had to guess, I do think that Libra is going to split the difference. And I think that, or I should say the Libra Association is going to decide to do this once there's some public outcry on this. We'll get into the association here in just a little bit, but they can basically do whatever they want. Any of the people that are the node runners, part of the association, the founding members, can do whatever that they want. And I think they're going to split the interest created by the asset reserves between the association and the users kind of as a compromise. But that's just me guessing. I don't know for sure. Libra will also involve the currency. They're going to be burning and minting new currency as the market demands. If more people are using Libra and demand goes up, they can purchase more reserve assets for the basket to back more minting of Libra. Conversely, if demand drops, they can burn Libra, sell off the reserve assets or whatever that they want to go do. The interesting thing too is that that all that money that's made from selling these assets as they burn Libra is going to be going to the founding members, anybody that holds a Libra investment token. They have not specifically said, and maybe I missed it, but I did not see anything in there where they were specifically going to 100% back it, right? So if they're saying we hold these baskets of currencies that equal out to X amount of Libra, we don't know if it's going to be 100% backed, right? So if they have 2 billion Libra in circulation, that they have 2 billion in assets. They may do what banks do, which is one of the worst things about central banking policies, is this fractional reserve, where they really only have 10% of the assets. So if a bank supposedly says it's got, let's say enough customers to have, $1 million in bank deposits, so that if everybody combined all their bank accounts, they had $1 million total, they only hold about 100,000. Because normally they say, well, not everybody goes and tries to pull their money out. Problem is, if anybody does, the bank just shuts down. Oh, well, sorry. But this will be very interesting to see if they actually go and do this, because Libra is going to be taking on banking. They are going to be taking on wire transfers and the SWIFT systems and all this kind of stuff. This is kind of one of the neater aspects, and it'll be really interesting to see what banks do. But we could talk about that at a later time. So the wallet itself, Facebook is going to be creating the Libra wallet app that will be available once Libra launches, like I said, early to mid next year. The wallet's going to be integrated natively into Facebook Messenger and WhatsApp platforms. This has a combined user base of 1.9 billion people. 1.9 billion people. That is basically mass adoption once they launch this. Possibly. I mean, not everybody could start using it, right? But, I mean, to have 1.9 billion people directly with this in their face, that's definitely a leg up on what Bitcoin ever had in its early days. The app, the Libra app run by Facebook, is going to require you to verify your identity via KYC, know your customer laws. These are required for any banks. You'll notice if you open up a bank account, they need your driver's license, social security card, all this kind of stuff to verify you are who you are. And you will, as you do with other finance apps like Cash App, you'll upload a government photo ID. Possibly with a lot of these things, they'll have you upload your photo ID, take a picture of your face. Sometimes they'll even have you hold the driver's license next to your face, that sort of thing. And once you are approved, you will be able to use a debit or a credit card and likely link your bank accounts so that you can purchase and sell Libra as you so please. And use that as your native currency on Facebook and other locations. Facebook has also intimated that in areas of the third world where, just the ability to download apps and all this other kind of stuff may not be, or even if you don't have a bank account, right? If these services don't exist, there will be physical locations available just to basically hand over whatever your local currency is to be converted into Libra and then dumped into your app. I don't think this is like them saying they're going to franchise, buy Libra stores. I think they're going to be pushing it out into the normal networks of independent money changers to offer Libra. They're going to basically offer it same way that, Vodafone offers, which Vodafone is one of the partners, the way that Vodafone offers the ability to buy phone credits, right? So as you go and you buy these the little phone credits and mobile phone credits as you pay for it, then you can load them up. I imagine the same way it will kind of be with Libra. The wallet is the Libra wallet run by Facebook, right? There's going to be other third parties that are going to be making their own wallets, which will be very cool as well. But the Libra wallet is supposed to include the password recovery options, two-factor authentication, and customer support. This is a very important addition that Bitcoin does not have. There is no password recovery if you lose your private key, if you hold your own Bitcoin. There's also no customer support, unless you use something like Coinbase that has custodial, that holds your Bitcoin custodially. But if you actually do Bitcoin correctly and hold your own private keys, one of the trade-offs for ultimate, true security and true financial sovereignty, one of the things you trade off is convenience and kind of, whoopsie, I made a mistake support. The Libra wallet will likely be the most popular wallet since they are, releasing it first, and it's going to be native. But like I said, with the open source, there's going to be a multitude of other wallet providers. So lastly, who is the Libra Association? These are the people actually running it. I'm not going to list off every company that's signed up, but companies like Visa, eBay, Spotify, MasterCard, Uber, PayPal, and Vodafone are among them. As of recording this on 20 June 2019, I mentioned this already before, but they don't have 100 total members, but I imagine that they will soon. It is important to note, though, that while there's some big names, there are also some big names that are not associated. You don't see Apple, you don't see Microsoft, and you don't see Amazon, which is a real big one, or something like Alibaba. Although Alibaba and all them, WeChat, which is the biggest social media app and messaging app over there in China, already kind of does the same thing that Libra does, which is, I think, why they are doing it. Because I think that they want to be through WhatsApp what WeChat is in China. which is not really necessarily a good thing, but we'll talk about that later as well. So the purpose of the association is to run the validation nodes. They validate the transactions, the state of the network, and they provide consensus for the network, as well as have ultimate authority over the protocol. 2/3 of the majority of the node operators, the members, are going to be needed to make any changes to the protocol, as well as they are the only ones that can mint Libra, create new Libra, or burn Libra as did I say Libra? Or Libra, burn Libra as needed. And there doesn't seem to be any kind of limitations as to what the members can or cannot do to the protocol if they have majority. So they can basically do whatever they want to the network if they so please. As mentioned before, they said they intend to open this up to be a permissionless system in 5 or more years, which means that there will be more members of the association. But like I said, I highly doubt they're going to let average Joe into it with a one node, one vote without at least prerequisites. So it'll probably be something very similar to their current billion in assets, plus a certain amount of coin to purchase, probably a diluted amount of actual voting shares. But they may cut down these requirements to kind of widen the net if they feel the need to. What's interesting is I was discussing this with Vin Armani earlier today, and if Libra had done everything that they've already done, except for not issuing this Libra investment token, there wouldn't be really much rub with U.S. regulators. Since Ethereum has been pretty much declared not to be a security, there's no reason that Libra could be confused as being really that much different other than Ethereum in the way that it operates. But by offering these investment tokens to founding members in exchange for this $10 million, they're already putting themselves in the crosshairs of regulators as a security. I mean, this is not a gray area. You are issuing tokens with the expectation of profit via the interest off the reserves. That's the very definition of a security. And we'll kind of talk about a little bit more about that regulatory aspect towards the end of the episode. But Vin's opinion is that they are basically throwing down the gauntlet to regulators and basically calling out their army of lobbyists and lawyers to do battle on this. So they may very well be successful. I personally think that there's probably a lot of big aspect of that of like, let's just do this. They're we'll take our chances. But I also think that I find it really hard to believe that they have not been doing a lot of meetings with government regulators, with congressmen, with people in charge of this sort of thing. And not basically, obviously they're not going to get anything in writing, but basically get the wink and the nod of like, don't worry about it. Yeah, I mean, there's going to be fuss thrown up. There's going to be congressional hearings, but, don't worry. We got you. This is going to happen. Because I think that there's a lot of people within the government that really would like what Libra is going to do. So the question is, how is this all going to shake out? Will this become a privacy nightmare? Will it be a positive move overall in the world? Will it even succeed? Well, in my opinion, to that last question, absolutely yes. Libra is going to succeed, at least in the short to midterm. And by that, I mean kind of within our lifetime-ish, maybe less. It will find a use case, I think, in the third world first, with less adoption in the West, in my personal opinion. I mean, we already have Venmo, we already have Cash App, and stuff. There's not really a lot of clamoring of people going like, we want another, Cash App. We need a new one. We want one that is run by Facebook. That's what we really want. There's a lot of people that are going to like it. They're going to try it. They're going to use it. I'm not saying that they're going to have some like 40 people in the country using it, but I don't think that there's that the use case is not as strong here as it is in the third world. So people are relatively happy with their national currencies in the West. There's some notable exceptions. Not saying that they should be happy with it, but they are. But the third world is where people really need a stable currency the most. Argentina, Venezuela, much of Africa. Inflation has run amok, and destroyed people's ability to securely, safely and securely, safely secure their value of their labor over even from a short term to a long term. In many parts of the world, a common feature of payday is rushing to change it over to foreign currencies that are more stable, like the dollar or euro. Buying gold, buying physical items, food, whatever, any asset that's not going to lose its value as they hold it. Libra will offer them the ability to hold value in something that is stable. 1% to 2% swings in the reserve assets. I don't know the exact. I can't say it's only going to be 1% to 2%, but it's going to be very small swings. And that's nothing though. Like having the paper that you hold lose 34% of its value in a year, like they're experiencing right now in Argentina. If you can imagine that let's say you had, $10,000 in the bank, you have $7,000 now. You had $1,000 in the bank by the end of the year, or $1,000 in the bank, and by the end of the year, you can only buy $700 worth of stuff. That's a really, really bad thing. It destroys generations from being able to kind of build up any wealth to pass down into next generations if those assets that you have, if your money is constantly losing value. I apologize. I actually had to step out here for a minute and get some tea for my throat. I was losing my voice here just a little bit, but I can see, even though I am not thrilled about Libra overall, there is going to be some positive effects in the third world and may help to, stimulate actual, real, healthy economic policies in many of these countries if they want their national currencies to be able to, compete with the Libra. Another positive outcome I hope for is that, antiquated securities and tax laws get changed or removed altogether. People in Bitcoin know this nightmare already. Say you buy Bitcoin. A month later, you buy a cup of coffee with it, or you use some of that to buy a cup of coffee with it. But over that month, since you bought it, Bitcoin's doubled in price. Well, the moment you buy that coffee, you trigger a capital gains event and must pay taxes on the $3 you spent on that coffee, because 1 month ago, that same amount Bitcoin was only worth $1.50. So not only are you paying $3 and whatever taxes on the coffee are, but now you're paying capital gains taxes on even using that $3 to buy a cup of coffee. So, it's really hard to navigate overall, and Libra is going to encounter these same issues. And what I hope is that we will end up getting a more positive environment, not just for Libra, but for Bitcoin and just humanity overall, on the backs of these Libra Facebook lobbyists. So Bitcoin has lobbying advocates like Coin Center, and while they do great work, their budgets are crumbs compared to what Facebook and these types of players can bring to bear. The last positive thing that I will mention, although there are actually more, is the interesting experiment that Bitcoin has created, and that we are watching in real time. The concept of the denationalization of money talked about by the great economist Friedrich Hayek. I doubt Libra will be the last corporation to experiment with this. And it is somewhat exciting, or I shouldn't say somewhat, it is actually exciting, even though if there are players like Libra that I'm not really crazy about their actual values. But it is exciting to see this competition and an actual market for money evolving and being created right before our eyes. So those were a couple positives that could come out of this. What are the negatives? Well, the obvious is the creation of a privacy nightmare. Facebook already is notorious. We all know this. If you watch any sort of news over the last few years, even longer than that, really, they track their track record for privacy is as horrendous as you can get. And yes, I did say earlier that the protocol is pseudonymous, and I also mentioned that they are not going to attach, like the Libra wallets, or I should say probably the public addresses, to the real-life identities on the protocol. But what does that actually mean? What this means is, as I've already kind of gotten into before, is that the protocol, the underlying, the math functioning of the network isn't going to have a wallet listed on the network as Donald Trump's wallet or Barack Obama's wallet. So it's not going to show Donald Trump's wallet, and then you'll be able to look and see, well, in Donald Trump's wallet, yesterday he sent 14 Libra to KFC for a meal, and today it sent another 100 Libra to Ivanka Trump's wallet. There's going to be a string of characters indicating one wallet sending 100 Libra to another string of characters. That's going to represent another wallet. But remember, again, also that just because something isn't tracked on the protocol and named by name doesn't mean it can't be tracked at all. And on the contrary, it will be tracking you, and you'll get tracked very, very hard. What will happen is this. Spotify, eBay, Lyft, Uber, Vodafone, all these companies will integrate Libra. You will be able to buy their products, with it. You will be able to use your Calibra wallet or even a third-party wallet, right? A third-party producer you just get off of the Google Play or Apple. And once you take your pseudonymous Libra wallet that doesn't have your name attached to it and purchase Spotify Premium, you are known. And I can bet the node operators and participating companies will share the user wallet data of who is who, right? So if you or I looked at the Libra blockchain and they saw, let's just say, wallet ABCDEFG sent 10, Libra to another wallet, we're not going to know who those two people are, right? And the network and the participants may never know who that is. But once ABCDEFG sends 10 Libra to Spotify for a year of premium, ad-free Spotify, I can guarantee you that they are going to have a collective list within this group of these members that is going to have it's going to be a massive, massive, massive list of who owns what wallets and what they buy. As I talked about in the Medium article that I released a couple days ago, actually I think I did it on Tuesday as just kind of a quick hot take of the Libra currency, is that this is going to form a panopticon of what I'm kind of calling the retail surveillance state that's part of the overall surveillance capitalism that has been building around us. And it's going to be something that we only have read about in novels. Facebook will do what they're saying. They're going to start to give you your privacy back, and they're not going to track and really care about your likes and your shares and all that kind of stuff, because they're not going to need to. They will now begin to create a list of what you actually buy, not just what you like or what you shared or what you said that you liked and would like to buy, but what you actually buy is a much, much, much better indication of your future spending habits than what you like, what candidates, all this kind of stuff. How you actually spend your money is a much better indication. So let's just say, for example, they will know that in the past, on most Fridays, you went and had 3 to 6 drinks at a local bar, and then most often you'd order Uber Eats from McDonald's when you came home tipsy. Recent purchasing activity has now been kind of showing that you've been trying to eat healthier, and purchases show that you bought some detox teas to clean up your body and kind of purge all that alcohol from your system. And it's been 4 weeks since you last went out to drink. But tonight, you did so and went out and drank, and now your social media is being hit up with McDonald's Uber Eats ads, $1 off or something like that. And even though you hadn't even thought of it yet, or even maybe never would have, now you do see it, and 25 minutes later, you're smashing that quarter pounder of cheese and a strawberry milkshake into your face. Another reason I think that this will succeed is that, governments around the world have dreamed of a cashless society. India is actually moving very, very quickly towards one. And it's not just because paperless is better for the people or environmentally conscious, but its tracking abilities are second to none. If every transaction is known, you can tell a lot about a person. Whether they're going through a rough time or they just fell in love and they're just new dating, a lot of movies and dinners and all that kind of stuff. You can tell if they're not going to be able to pay their bills next month, if they're abusing drugs, engaging in risky behaviors, eating unhealthy, all this kind of stuff. All this has very real consequences, from the more kind of political thriller of blackmailing possible dissidents to arresting somebody for buying drugs, even maybe in the past, right? When they didn't realize it was buying drugs until much later. Or even increasing someone's health insurance costs because they eat a lot of fast food or they party too much. Your doctor puts you on a cholesterol-lowering medication and stipulates that you need to decrease, your food intake and exercise more. Well, Libra purchases indicate you've been continuing to eat Arby's twice a week and never renewed your gym membership. So your health insurance rejects the claim for payment of the medication next quarter until you can kind of show that you're willing to actually do everything that's required to decrease these unhealthy life habits that are leading to your health problems. In the West, there is healthy skepticism to a certain degree, depends on where we're at, and much less so in recent decades. Towards government surveillance of what we do, what we buy. And this is a very good thing in terms of an open society, a free society, a society we all want to live in. Cashless societies have been rejected in the West because of these concerns of loss of privacy or liberty. If a private company did it, however, it could sidestep this concern. The US dollar or British pound is still available to use. You don't have to use Libra, they'll say, but retailers will be drawn to the benefits of maybe not needing to pay 3, 5, whatever percent it is for a credit card processing fee. And they may even actually be given the carrot of being given interest, a small piece of interest. But even if it's like 0.001% or even 0.01%, which sounds like a pittance, it really is not, compared to, well, I can make a few bucks, or I could be losing $3 at every $100 that I spend, right? In the occasion that they hand over the data, right? Who bought this? What was the name? On the who bought this? If any of this data, right? And you can collate this stuff, and you can figure out their spending habits. And I'm guessing that this data that will be handed over by retailers will be done. So there's going to be a bunch of other private chain analysis teams, but I can guarantee you there's probably going to be some sort of Libra Association or adjacent that's owned by a lot of the people in the Libra Association, some sort of consumer chain analysis company that's going to collate all this data and create that retail surveillance state. So this retail surveillance state is part of the concept, like I mentioned, of surveillance capitalism. It is much more preferable to governments around the world who wish to surveil their citizens more but can't, or want to sidestep legal protections. Because, for example, freedom of speech. Under the First Amendment, it's a negative right. And a negative right, by that I mean that it is saying the government cannot stop you from, right? A positive right says you have a right to something. A negative right means you have the right to not be have that right inhibited from you being able to practice it. So they can't stop you from speaking your mind in the public square, although some terms and conditions do apply. So this means like they can't outlaw you being a socialist or outlaw you being a furry or however you wish to express yourself. There is, however, no legal protection of your speech on something like Twitter. Twitter sets terms of service that can run totally antithetical to legally, or what we consider legally protected speech, or even the concept of just the kind of larger concept of free speech in an open society. And it's perfectly legal, and I would argue that it is morally acceptable for them to do so, given that it's voluntary in nature, the arrangement. A private platform offers no, or I should say fewer protections in the public square, depending on which platform we're talking about. It is technically illegal in the U.S. for an intelligence agency to read your email or see who you called or any of this kind of stuff without obtaining a warrant first. It is perfectly legal for Google to read your emails, which they in fact do by scanning them to obtain better data on what products to market to you. And in a lot of ways, you can kind of chalk up what Facebook and Google do as far as their surveillance as semi-harmless, in that for the most part, they're just trying to sell you things. And this was my thought process on this for a long time, although I am starting to very much kind of change this, seeing as where things are going. But, for a long time, it was kind of viewed as harmless. They're just trying to sell you things to improve your experience by not showing you ads of, say, horseback riding equipment, and you hate horses. And instead, they show you stuff about Marvel comic books. It's something that you're interested in, right? If you actually if you go to Google, you turn off all your location data, you turn off all your cookies, you turn off everything any of the data tracking stuff that you are allowed to turn off, your experience gets pretty bad. And, it is a convenience thing, right? It is kind of nice. Like if you go and search restaurant in your Google on phone, you go to Google and you type in sushi restaurants nearby. It's going to use your location to find out. If not, it's just going to go wherever your IP probably is, and wherever you're connected to, or I guess that'd be more desktop on your. But anyways, it's a worse experience. But the problem with all this stuff is that they are turnkey solutions to a police state. Examples of which I don't really need to list off. You know most of them. But just imagine, though, how useful it would be for a totalitarian government to know that a large subsection of dissidents that are protesting them right now are also fans of Neil Stephenson and his book Cryptonomicon in particular. With Libra and, say, Amazon, you could easily find out every single person who's bought new and used copies, or I should say most of the used copies of this book in the last 5, 10, 20 years. You don't need to argue a new law in Congress if a corporation will turn over that same data to you, often without even a request, or often with only a request and no warrant. So, all that stuff, the concepts of what this will mean for privacy and freedom are pretty bad, right? The other question that a lot of people ask is, what does this mean for Bitcoin? Well, a lot of critics, some of them, I'm surprised actually not more, have used this announcement and will use Libra's success to bludgeon Bitcoin as being the more environmentally wasteful one, slow and expensive. It's not as good. Libra's way better. I covered why the environmental concerns are actually way overblown in episode 28 of my podcast with Christopher Bendixson, where we kind of basically went over that. Actually, compared to a lot of other industries, Bitcoin's actually the energy usage is actually about 75% renewable, which is way better than you'll find in a lot of other places. But to be fair to critics of Bitcoin, specifically, I guess, Bitcoin BTC, some of these criticisms are legitimate. It is slow compared to Libra, which will do this in 10 seconds. And it is far more expensive compared to free, right? That being said, there's reasons why Bitcoin is this way. First, you can achieve cheap transactions on, say, Lightning Network, which is being developed, or on-chain with bigger blocks, which is what the proponents of Bitcoin Cash have, put forward. The biggest thing is that Bitcoin is truly decentralized. It's not in the hands of 100 mega corporations, but in the hands of anybody who has basically a laptop laying around, can run a full node. Anyone who wants to run a miner or a node, miners are a little bit more expensive than that, can participate if they want to. There's no single point of failure in Bitcoin. There's thousands of nodes, and they all have to reach, consensus. There's, unlike, a 50-man committee in Switzerland that can change the protocol on their whim. Bitcoin cannot reverse transactions and cannot block you from using it. They can't take your money away from you, and they can't stop you from transacting. It is censorship resistant. That is one of the most important things as well, if not probably the most important thing, is that Bitcoin cannot stop you from sending a transaction to somebody. Libra, I can guarantee you, will censor transactions. They will not allow people who are political dissidents, I'm sure in China, if China even allows them in there, to receive the money. And they will, Facebook will actively participate in a role where if they can identify if a dissident, let's just say, uses a wallet address, they will block people from being able to send it. They may even take their money from them. I mean, this is hard to tell, but I don't doubt, given their history. Bitcoin, you cannot do that. If I send one Bitcoin to a dissident because I like the work that they do, no one can take that Bitcoin away from them. No one can stop me from doing that. That also does not mean that there's not consequences for me doing that if it's known that I did it, but nobody can actually stop me from doing it. In the same way that if I want to send a wire transfer to a dissident in Venezuela, I probably can't really do that. Bitcoin is also deflationary, as we mentioned, and also has a fixed supply. Libra is basing their currency on the same currencies whose systemic failures led to Bitcoin in the first place, right? There's no fixed supply. The amount of Libra can also fluctuate. There can be more or less, just depending on the whims of 50 people in Switzerland. We talked about this earlier as well. Bitcoin's value continues to rise. And I made this point, but I think it's really important to note it again, is that as Bitcoin's value rises and the basket of currencies and assets that Libra holds continues to lose its spending power, the Libra Association will be forced to hold Bitcoin to remain competitive against it. And in my opinion, will become increasingly irrelevant as their holdings grow to hold more and more Bitcoin. And people will just, as they hold more and more Bitcoin, people are just going to hold Bitcoin themselves. Versus, why trade my sovereignty and privacy to someone so that they can gain wealth off of it for themselves when I can just do that? And that is what Bitcoin is, financial sovereignty. So in the long run, I am very, very bullish on Bitcoin like never before. And Libra, like the corrupt currencies it holds, will end up in the dustbin of history. I hope you enjoyed this episode. Thank you very much for listening. If you do me a huge favor, if you enjoyed it, please go over to iTunes, leave a 5-star and a written review. That helps me so much. You have no idea, because that's actually what helps propel the podcast forward. It gets it in front of more people when they search for something like Bitcoin or whatever in the search bar for podcasts. If you can also go over to supportmypodcast.com and see all the other ways that you can help. Amazon, all this kind of stuff. Sorry, my voice is going out again. And I'm also starting a discount program for listeners and supporters. Absolutely free, costs you nothing. I don't take any of your information. All I basically need is a email so that I can get you a password to log in. It's going to be launching very, very soon. And it's going to give you discounts on things that are normal Bitcoin stuff like Keep Keys and Trezors and Bitcoin merchandise, as well as increasing number of retailers that sell health-related products that I use and can vouch for. And that'll, once again, be absolutely free. Sign up to get on the list at supportmypodcast.com/discounts. That's supportmypodcast.com/discounts. So once again, I'd like to thank you so much for listening, and I'll see you next time.